If you're deciding between a fixed rate or a variable rate right now, most of the information online is already out of date. Let me show you the actual numbers. So quick context, if you didn't take a look at my last video, Bank of Canada has kept the rates at 2.25% for quite some time now, with most of the banks expecting them to go up, not down. That video is the backdrop that you can actually use when you're talking to your uncle who claims he knows more about real estate than you do. But today we're actually going to talk about what to do with that information. So by the end of this video, you should know exactly what either fixed or variable costs you today, what happens if each of the rates move the ways the banks expect them to move, and how to think about which one better fits your situation. So let's start with real numbers on a real purchase. Let's say you're buying a $500,000 condo in Toronto with 5% down. So you're financing $475,000 over 25 years. And today the lowest variable rate that you can find is 3.35%, which would equate to $2,340 a month. The lowest 5-year fixed is 3.94%, which equates to $2,492 a month. So in this case, variable saves you about $152 every month, or just over $1,800 a year. Now that's a starting battle that most people are talking about, but that's only half the picture. So here's the part that most people never actually run. Variable rates are the rates that move with the Bank of Canada. So let's say one of these forecasts play out. So you're looking at 3.65 by the end of this year, 4.15% by mid-2027, and up to 4.40 by 2028. So obviously your variable payment's not staying at $2,340, it climbs. So if we're doing our math right here, by 2028, the same mortgage would cost you about $2,613 every month, which is $273 more than it is right now for you, and $121 more than today's fixed rate. Fixed, on the other hand, is self-explanatory. It's locked. Whatever you sign at today, you pay that for your entire term. So in this case, it would be 5 years at $2,492 for the foreseeable future. Nothing you got to worry about. That's your amount that you got to pay. And that's regardless of what Bank of Canada does next. So the real question isn't actually which one's cheaper today. It's just which one are you more comfortable being wrong about? And here's how I'd break this down by situation, not by opinion. Let's say you're stretched in terms of affordability and you're buying at your absolute max, so then even a $150 to $200 increase could be a real problem for you. The safer play is usually fixed. You're not betting on a forecast, you know your number for 5 years. If you've got room in your budget to absorb a rate increase without feeling the pain, or without it making drastic changes on your life, and you're comfortable riding out some uncertainty for a shot of paying less overall, at least variables discount today is real money. But you're gonna have to be able to stomach that your payment could climb over the next 2 to 3 years. Now, if you think you might sell, move, or refinance within the next 2 to 3 years, the fixed rate penalty for breaking early is a lot steeper than a variable rate. And that's worth factoring in regardless of where rates go. So what's my actual take on this? Given everything we've just talked about, so rates on hold with more forecasted upside than downside, here's what I'm telling my buyers right now. And this is advice that I give my buyers that are more in tune with their finances and check regularly. Not necessarily people that just want to know the same number every single time, because in that case I tell people to go fix. But if you're really in tune with the market and you keep on the pulse of it and you're watching interest rates, here's what I'll say. Leading variable isn't a bad idea, but you got to monitor it. It's the lower payment today, and rates will gradually increase if they follow this forecast. They won't spike immediately. And the safety valve here is that most lenders will let you convert from variable to fixed if the trend turns against you. But I'm going to be straight with you. You're not going to get yesterday's fixed rate. If you were planning on converting, you were going to get what the bank or financial institution is offering you at that time. So it's flexibility, not a guaranteed dodge at higher rates. And for me, that flexibility, given you're very responsible and you're on it, again, is worth looking at the lower payment today. But that's a trade-off you're actually making. I also come from a household of consistently taking variable rates. So I truly love that your personality really plays a part here. So let me make this concrete with 2 people I talk to on a consistent basis, buyer A and buyer B. Let's say buyer A was pre-approved 3 months ago and we've gone out there shopping, and ultimately they're waiting for rates to come down. Based on everything that we've covered, their hopes are not backed by the forecasts that we've been seeing. The banks think the opposite most likely. And let's say buyer B needs to move and their mortgage renewal is coming up soon. And let's say they locked in for a long time. So by the time they got their interest rate from before, it was at a much lower rate than they would be getting today. So for them, this fixed versus variable decision isn't optional. It's happening right now. They've got to make a decision, whether they've thought it through or not. Please have these conversations preemptively and think it through. So if any of these sounds like you, take the time to look at the numbers in this video and run your own depending on what price point you're at to make sure you're making the best decision for yourself. Because that's the actual math. It's not a guess, not a vibe. It's based on what's actually happening in the market today. And if you want any guidance or you want to talk about this before you lock anything in, that's a very smart conversation for us to have before you make any decisions. And if you missed it, you can go back and watch my last video. It talks about why the rate environment is currently what it is today and how we even got there.